Ever thought you could be the person who raises thousands of crores for India's largest companies? The people who do this have something most finance professionals don't. They understand debt capital markets. In the next 8 minutes, I'm going to answer 3 questions that most MBA programs never do. 1. What exactly is debt capital markets? 2. How does money actually flow through these companies? And 3. Where can you fit in as a career? This is not textbook knowledge, but real experience. Let's start with something real. Imagine a company wants to build 500 kilometers of highway. That costs thousands of crores. They don't have ready cash in their bank account. So what do? They could go for a bank loan, that's one option. But banks have limits on how much they can give one borrower. So the company can go to the capital market, issue a bond, essentially a formal promise. Give me your money today. I will pay you interest every year and return your money in full at the end. Those investors include mutual funds, insurance companies, banks, provident funds. They buy that bond. The company gets its money, investors get their return. That entire ecosystem of borrowers, bonds and investors is debt capital markets. Think of it this way. If equity markets are about ownership, debt markets are about funding, the kind of funding that keeps companies running every single day. And in India, debt markets fund everything. Roads, power plants, home loans, your neighborhood hospital. The economy runs on debt capital and somebody has to manage it. Let me give you one number to put this in perspective. In FY 2024 to 2025 alone, Indian companies raised 9.9 lakh crore through bond issuances. That is the highest ever in India's history, and next year it is expected to cross 11 lakh crore. Yet how much of your MBA curriculum covered how this actually works? Valuations, IPOs, M&A, yes. The mechanics of debt markets? Rarely. That gap in education creates an enormous opportunity for those who take the time to understand it. This market is not slowing down. The demand for these roles is huge. The supply of people who actually understand how this works? Rare. Now, where do careers in debt capital markets actually live? Let me walk you through 5 zones on this map. Zone 1, you work inside the company that borrows. Your job? Make sure the company always has money for business. You decide, should we borrow from a bank today or issue bonds? What rate can we get? Are we within our financial limits? This is the treasury function inside an NBFC or a large corporate. You are the funding engine. Zone 2, you sit in the middle. You don't own the money. You don't borrow the money. You connect the two. This is the debt capital markets desk at a bank or investment bank. A company needs 500 crore. You find investors, price the deal, execute it, and close it. You are the bridge. Zone 3, you are on the buying side. You manage a pool of money from retail investors, policyholders, or a pension fund, and your job is to invest it safely in bonds and debt instruments. You analyze which company's bond to buy. You track credit quality. You protect capital while generating returns. This is a fixed income or credit analyst role at an asset manager. Zone 4, you are the referee. Rating agencies like CRISIL, ICRA, and CARE analyze companies and assign a rating. AAA, A that tells investors how safe a bond is. Your opinion moves markets. A downgrade can spike a company's borrowing cost overnight. This role builds analytical depth that opens doors across the entire ecosystem. Zone 5, the most specialized and perhaps the most fascinating. Take thousands of small home loans, auto loans, or microfinance loans, bundle them together. Create a new security out of them. Sell it to investors. This is securitization, and it lets lenders recycle capital and keep lending. The professionals who do this sit at the crossroads of credit, law, and markets. Rare and very well compensated. 5 different zones, 5 very different days at work, but all connected by the same underlying engine, debt capital markets. The question isn't whether there's a place for you here. The question is which station calls to you. Here's what I've seen across 20 years in this industry. Most finance professionals know about debt. Very few understand how it actually works from the inside. The ones who do don't struggle to find roles. They don't apply. They get called. They get trusted with the deals that matter. They become the person in the room that everyone listens to. Not because they were the smartest in their MBA batch, but because they understood something most people never bothered to learn. If this map made sense to you, you're already ahead of where most people are. At IB Club, I've built focused, practitioner-led courses that teach you exactly how each of these zones works. Not theory from a textbook, but real transactions, real structures, real decisions. There's a course for wherever you are right now, whether you're figuring out if DCM is right for you, or whether you're already in the industry and want to move faster. The link is in the description. Find which path fits you best. I'll see you inside.